Palantir, absolutely massive news for Palantir here today. Stock's moving up very nicely. We'll get into exactly what's going on there, my opinions and perspectives on that. Then I want to react to 4 little videos here. Okay, first one up here. If you didn't know, Salesforce stock is absolutely collapsing here today. Okay, it's down about 20 percentage points. I spoke about Salesforce last night on the main channel. I want to go ahead and hear Dan Ives speak about Salesforce in their first revenue miss since 2006 and kind of give my opinions and perspectives. April pending home sales fall 7.7% monthly as higher rates dampen demand. Looking forward to getting into that one. No bueno. Home sales should be booming in the springtime. April and May should be massive months for home sales. You can't have a falling home sales during springtime. No, no, no. Baby boomers redefining travel. Important video I want to watch there, because if you want to own any sort of travel related stocks, you got to understand baby boomers, how they want to travel, because I'm telling you, these folks are the ones that will dominate the travel industry over this next 10 to 20 years. And then the last one I want to react to, Chipotle CEO. If you didn't know, there's a whole trend going on out there. People are recording essentially when they're going into a Chipotle to try to almost like bully employees a little bit, to actually give them like a good amount of food, because there's a lot of people saying like Chipotle's cut back on how much they're giving and those sorts of things. So looking forward to seeing how the CEO addresses this here today. Okay, appreciate you guys joining me as always. I never bully you, but I do ask that you hit that like button down there and that you're subscribed to the channel. That's all I ask. Okay, no bullying here. Okay, appreciate you guys joining me. If you want to support me content on Patreon, I'll put that as a pinned comment here today. I haven't shouted out that in quite some time. We have a tier that if you just want to support me, you can. We also have a tier where you can see the stocks I'm buying and selling each week in the Patreon portfolio. Plus, you get access to the Discord chat in that one as well. And then last one we have a tier for is the moves I'm making in the market each week, plus Discord chat, plus access to my Becoming Master of the Stock Market course. So yeah, that will be the pinned comment down there if you're looking to join in there. So Palantir wins $480 million defense contract for AI system prototype. Palantir has been awarded a $480 million fixed price contract from the U.S. Department of Defense for a prototype for its Maven artificial intelligence system. The contract has an estimated completion date of May 28th, 2029, so 5-year contract, right? And the U.S. Army Contracting Command in Maryland will serve as a contracting authority. Last year, Pentagon published a redacted, I don't need to go into all that, okay? But the moral of the story is that Palantir, huge deal here, obviously worth high tens of millions of dollars a year, right? High tens of millions of dollars. So massive deal, like a little less than $100 million a year, right? Massive deal for Palantir. Now, what does this mean for Palantir's business model and their numbers moving forward? This means we're going to likely start to see Palantir's government-related revenue start to increase. I'm seeing them really nail down more and more deals so far in 2024. And so what we're going to likely see is, I think, a building of that government revenue, which is kind of been the actually disappointing spot for Palantir's business model. The commercial business has been booming. You know anything about Palantir, you know the commercial business is booming. You know AIP boot camps and all of that whole story, right? Phenomenal. But the government business has been, it's been lame. You know, it's really been lame, which I don't have the biggest problem with, because I'm not investing in Palantir for the government side of the business. I'm investing in the commercial side of the business because I believe the commercial side of the business is going to dwarf the government side, the military side, anything like that. It's going to make it look like little numbers long term. But in terms of the biggest absolute numbers for Palantir right now, it's very important everybody understands that government-related revenue is the big business for Palantir still at this point in time. The commercial business is the big growth engine, but the big absolute numbers is government, okay? So very important everybody understands that. Now, you know, Andre, who helps me run the private group, right, he sent me over that information like he had it before like anybody had it. It was incredible. And he texted me that over yesterday, and my first thought was, you know, the stock's probably going to be up 5, 6, 7, 8% here today. And I was like, man, that's such an easy trade. You know what I mean? I was just thinking like, having that information first, buying it after hours because it came out after hours, but no one really had it at that particular time. And I'm like, dang, I could just make it easy. I ended up not, making a move off it, because the reason I don't do that is because at the end of the day, I know me, and I know like if I do one trade, it's going to make me want to do another trade and another trade, and then I get into more of a trading mentality instead of investing, and then it leads me to all bad places. So it's like a little devil out there. But it is. I did look at that as soon as he sent me it over, and I'm like, Palantir is going to have a great day tomorrow, and sure enough, it's having a great day here today. So just goes to show you, if you're a trader, man, you got to stay up on all this stuff and all that news. You got to be able to see something like that and go ahead and buy that stock after hours yesterday, because it was easy money. It was easy money. Like, a $480 million contract like that, it's huge for Palantir, and it's going to move the stock up significantly, right? Why? Webbush's Dan Ives, and by the way, that's one of the secrets of life. Sometimes when you could be in enough of a position of power to say no to easy money. Because there's so much easy money I say no to all the time. But it's for reasons. Okay? Why Webbush's Dan Ives is staying bullish on Salesforce despite first revenue miss since 2006. By the way, if you're wondering, is Salesforce stock, okay? And once again, I spoke about that stock extensively on the main channel last night. Salesforce stock getting obliterated, okay? Absolutely obliterated. And look at that drop. If you're wondering, is Salesforce stock a buy here today, okay? The answer is, yes, it is a buy. Do you have to be ready for if that stock goes down to $200, 180? Sure. Is it likely to go back down here, 100 and under 130? I would say extremely low probability out of a full-blown stock market crash. Unless you get a full-blown stock market crash, do not count on that stock going back to under $130, okay? Very low probabilities, having a big washout day here today, right? If the market got weaker, let's say S&P drops 5-10% or something like that, could Salesforce go to 180? Sure. But do I see it going to 130? No, not outside of an epic stock market crash. So that stock is a buy here today. I will say that. Am I buying it today? No. There's so many opportunities in this market. Come on, man. So many opportunities. If it goes under 200, it's going to be hard to stay away from. If it goes to 180, I might have to make a move.
Come in here and say, Salesforce is the Luka Doncic of enterprise software, but instead you cut your price target from 325 to 315. What did you see? Because you're generally pretty bullish.
Luka better close out that series, man. Don't want to be choking.
That's a tweak. I mean, in my opinion, the weakness today, it's a table pounder that you own because it's a transitional phase of the growth story. And I think when you look at Benioff and where this is all going with AI, I believe they will see a renaissance of growth on the horizon. I think this stock being down here, to me, it's a golden buying opportunity.
You say that about almost all tech stocks when they take a dip. In all fairness.
Thank you.
But look, that's our philosophy. I mean,
hey, this guy, he usually is, low, no disrespect, but he's usually like low level on CNBC in terms of his commentary and just his being with it when it comes to the market and like really being on top of things and really like being one of those people that you're like, oh, they're really like into this stuff. But I like him there, okay? He might win me over. Because that's what I would honestly say.
To me, it's a golden buying opportunity.
You say that about almost all tech stocks when they take a dip, in all fairness.
But look, that's our philosophy. I mean, you own the special transformational growth themes. When the stocks get hit, many head for the elevators. That's really where we handhold investors through it, especially when you're dealing with the tactician, Benioff.
All right, so this was a bit of a head scratcher, I think, for a lot of people. Again, stock's down 16%. The company reaffirmed its full-year guidance, but the guidance for the current quarter was weak, and they raised their full-year EPS guidance. I mean, in your mind, what's going on? Is that simply a longer sales cycle? Is there something else going on when it comes to demand, especially for their AI tools?
Look, I think AI has it's confused sales cycles. We've seen that. You saw Workday as well. For Salesforce, with that golden install base, you're just seeing customers taking more time. It's normalizing. But Frank, I think where we sit 12, 18 months from now, they will be on that highway toward AI. And I think that could add an incremental $4 billion per year. That's why betting against Benioff, it's like betting against Luka.
In all fairness, we had a Barclays note yesterday saying that it looks like demand for their AI tools are going to be pushed out to next year, calendar year 2025, largely in part because they don't seem to quite have the product that people are looking for. Is that an issue? I mean, it's easy to say we're an AI company and we have an AI assistant, but adoption and people finding it useful is a different story. What are your channel checks telling you?
Yeah, I mean, look, I think for use cases, that continues to be for Salesforce 6, 12, 18 months out. But right now in the near term, it's about the first derivative. It's about Microsoft, NVIDIA, Godfather of AI, Jensen. When you look at second, third, fourth derivatives, Salesforce front and center, which is why I believe this is the start. This is a speed bump on what I view as the Autobahn going toward AI.
All right, so you think it's just a speed bump. At the same time, are there questions about enterprise technology? I mean, I'm just looking right now, or enterprise software, I should say. ServiceNow is down more than 4% in the pre-market. S&P, last time we checked, I think it was down 3 or 4% in the pre-market. The whole sector seems to be getting hit. Are there questions just about demand for enterprise software right now with so much money being put into AI?
Yeah, I think you nailed it. Look, it's a choppy environment because AI is sucking up budget dollars. We think it's 8 to 10% of overall budget. It was 1% a year ago. But my view is for the longer ServiceNow, Salesforce, we're talking about gold standard in this AI revolution.
Is competition possibly ramping up? I mean, Alphabet looking to buy HubSpot, which is kind of sort of a Salesforce competitor. I mean, Salesforce is so big. You mentioned their installed base. I mean, they're just such a legacy tech company at this point. But is competition possibly rising as more companies, they look to get access to AI? And we talk about platformization and cybersecurity, but isn't something similar going on when it comes to enterprise software as well?
No, look, it's a Game of Thrones that's going on. So you will see massive consolidation. But if I look at Salesforce, you look what Alphabet I think is going to do as well. It's a get out the popcorn moment. We're talking about $1 trillion in incremental spend. This tech bull market's here. This is a speed bump, in my opinion.
So, okay, so let me agree with Dan Ives and let me push back against Dan Ives here, okay? So first off, do I agree that Salesforce and many of these other companies have a huge opportunity in AI over time? The answer is yes. I definitely agree with that, right? No doubt Salesforce is going to bring in massive amounts of money long term from everything they got going on in their business, including AI, okay? But the place I'll push back on, right, is if you're in a tougher economic environment for big companies, which honestly, I gotta say we are, right? I posted last night in the private group 5 famous stocks that are insanely famous companies that are all at or near multi-year lows right now. And I can tell you, I could take it way further than 5 stocks. There's so many stocks out there, it's ridiculous, right? Especially out of just traditional tech stocks. And that's with a market that's actually fairly high right now, and yet you're still seeing that damage, right? So I wouldn't say corporations are necessarily so feeling great about spending, right? If you think about the cloud, right? AWS comes out 2006, prior to the Great Financial Crisis, right? Other competing cloud products come out 2007, 2008, 2009, and the cloud was slow growth at first, relatively speaking, right? And the reason being is, one, you got to build the numbers up. 2, we were in a great financial crisis at that time, so a lot of companies didn't want to spend on something experimental. Oh, this cloud thing, I don't know about that. I don't want to spend on that, right? And so the cloud didn't really start to take off in a major way in terms of the numbers for really 5 years, after AWS launched. 2011, 2012, I remember starting to be a lot of hype about cloud and a lot of people talking about cloud. Even 2010, started hearing a decent amount about cloud, but I'm telling you, 2011, 2012, you turn on CNBC, they're talking about cloud. They're talking about cloud, right? Very similar to how nowadays they're talking about AI. So, that's just some food for thought. Something worried me in regards to Mark Benioff. He got interviewed by Kramer last night, and I watched that. And one of the things that worried me, so first off, Benioff, salesman. Kramer asks him a question, somehow he tries to spin it into a positive, and it's almost like Benioff's almost always on offense. It's like you ask him a defensive question and try to put him on defense, and he goes straight offense. He's straight offense. Like, I don't care about your question, I'm going straight offense. I'm going to speak positively about this and that. So that's just kind of who he is, right? And that's us, great salesman 101 right there. But if Kramer did ever get him put on defense, there was at least 2 or 3 times in that interview where Benioff talks about not being able to control the demand environment. or something along those lines. It was kind of around that sort of vibe, not being able to control the demand environment, which at the end of the day tells me that he's seen some weakness from customers out there. Now, the other troubling thing, very troubling thing, out of that Salesforce guidance miss, right? And it wasn't like it was huge. It was $100-something million, which for Salesforce is not a massive number. But I will say the troubling thing about that Salesforce guide missing was that's not the only big tech that's missed their guidance as far as next quarter goes. Meta did the same. Amazon did the same. And there's been a few other kind of companies in the tech space that have also missed their guidance, which makes you you got to pay attention to that stuff. You got to say, ooh, like, are we potentially are we seeing like a second wave of these companies getting hit, the economy pulling back, something like that? You have to at least consider that, right? Because if they pull back that guide, who's to say they're going to even hit those numbers this upcoming quarter? Maybe it's even worse than they expect, right? And then what happens with the guidance the following quarter if things deteriorate even more, right? And that's where you get into an ugly cycle of your guidance misses, you miss your numbers, guidance misses, you miss your numbers. You got to start bringing down these expectations, and then stocks get hammered when that happens. And then when I say hammered, I'm talking 20, 40% drops. Quick. If you start missing your guidances and then missing your numbers, I mean, it's lights out. And it happens very, very quickly, right? So that's the thing you got to be, thinking about and a little concerned of as a long-term investor. What do you do in that environment? You freaking buy the dip, man. That's, you got to almost wish for that type of stuff. I mean, that's just, easy peasy, lemon squeezy, give me the money, pleasey.
And GDP and now pending homes. Let's get to Diana Olick. Morning, Diana.
Good morning, Carl. Pending home sales dropped 7.7% in April compared with March. The street was looking for basically flat. Sales down 7.4% year over.
Oh, guys, I've been doing this a long time. I don't know if I've ever seen a pending home sales number miss that bad. That's an insane miss. What? You're going to be flipping my flapjacks. A 7 percentage point miss? Huh?
Now, this count is based on contracts signed during the month, so at that month's mortgage rates. And that's your culprit. The average rate on the 30-year fixed ended March at around 6.9% and then just took off, hitting 7.5% by the end of April. With prices still climbing and supply very low, leading to increased competition, that jump in rates was a huge factor. Sales were down in every region of the country, but they fell the hardest in the Midwest and West, which is interesting because the Midwest has some of the most affordable markets and the West the most expensive. So you do the math. Anyway, mortgage rates eased up a little bit in May, but are rising again now. Another report out from Redfin this morning said the share of sellers doing price cuts hit 6.4%. That's the highest level since 2022. The median asking price also dropped for the first time in 6 months. So, guys, interesting dynamics going on with rates.
I would say so.
Yeah, I mean, are the lack of activity, the negative sales that we're seeing, Diana, is it going to have an impact on prices, or this inventory issue is still forcing prices higher?
You would think so. That's how it usually works, right, historically, but it hasn't been in the last year. And that, again, as you said, is because of the supply issue. Supply is leanest on the lower end of the market where demand is strongest. We are seeing a lot more supply on the high end of the market and more activity on the high end of the market. So you might see prices easing up there just because sellers don't have quite as much activity as on the lower end. But again, if you still have this lack of supply and lots of demand, it's going to keep a floor under prices. And with mortgage rates high, too, that just, keeps sales low. That's what we see.
Oh, man. Have you guys seen mortgage rates? Dang, that's vicious. I was just looking here in Nevada, right? And so this is interesting as far as mortgage rates go. If you have, let's say, a 700 to a 719 credit score, 20% down on a $300,000 loan, 8% they're talking about on a 30-year? Oh my gosh, what if you got great credit? Let's say 800 and up, right? They're talking about 7.4? 7.4 on a 30-year? I mean, I understand if we go way back in the day and, look at decades ago, 7.4% is not that crazy on a 30-year. The problem is everybody's gotten used to, over the past 15, 20 years, mortgage rates 3-4%, maybe 5%. And then you bust out a 7-something handle, and the market's just dead, man. I mean, you just can't do anything with that. That's wild, bad. No bueno for real estate. I mean, it's got to be brutal to be an agent over the past, be a realtor, a broker over the past, I would say, 2 years. It's got to be brutal. The only good news is, those folks hopefully made bank for a while there. So my hope is a lot of those folks saved away a good chunk of money. Dang, man, that's vicious. Baby boomers redefining travel.
This morning, baby boomers being credited with holding up that sector. Our Seema Modi has that story for us this morning. Morning, Seema.
Hey, Carl, we've been putting together a lot of analytical research on this. Baby boomers, this is a generation above the age of 55. They're traveling more and spending big. New data from Deloitte revealing boomers' total travel dollars spent is poised to climb from 28% last year to 34% in 2024. And there are some distinctive travel patterns. The older generation spends more on bucket list trips, pays up for premium experiences, and travels with other family members, which is benefiting timeshare giant Marriott Vacations.
You do see with a lot of the boomers that multi-generational travel, where you've got large families that are going on vacation. And the nice thing, our average units on the timeshare side are 2-bedroom, 2-bath, full kitchen.
Now, Geller adds that 80% of its owners are married and have children under the age of 17, and therefore like the fact that they can change up the size and location of the property every year. All the timeshare stocks are trading higher in 2024. Now, the cruise lines we know historically have seen strong demand from the older demographic, but increasingly so this year as they play catch up from the pandemic and opt for more expedition-based sailings. That is driving bookings for Viking Holdings, which just reported earnings unlike its peers that appeal to a wider net. It's fixated on the wealthy upper-income traveler. Viking CEO Tor Hagen recently telling us that baby boomers have more money and time. And in my belief, the moment when you try to do everything for everybody, you do nothing well. Take note that UBS Bank...
Wait a minute. Hold your horses for just a moment. Wasn't Viking owned by Carnival? I don't know. Maybe I'm tripping. I thought Viking... owned by, maybe I'm thinking about another brand, because Carnival owns a few different brands. I typed it in. It said Viking owned by Carnival. No, Viking. I thought they owned. No, they're privately held. Interesting. Viking becomes largest cruise challenger to Carnival and Royal Caribbean with $1.54 billion raised, and that's why that stock chart only went back a little amount of time, because now they're kind of new to the public markets. That's interesting. Okay, interesting. Who's the high? Because Carnival owns kind of a high-end brand. I'm trying to remember who they own. Carnival brands. Oh, I think I'm thinking of Princess Cruises. That's who I'm thinking about. Princess Cruises. Okay. Yeah. All right, so let's get back into this.
And Stifel are among the analysts initiating Viking with a buy rating. Average price target is $34, which does imply about 14% upside from current levels, guys.
Seema, the wires did run a story this morning about some cruise lines offering some summer discounts, and there was some confusion about whether that's pretty typical for this season or whether we're finally seeing pricing in that industry start to crack.
There's been some pushback to that data that came out this morning, Carl. I saw that article as well. Some of that actually has to do with cancellations related to Red Sea and some of the geopolitical conflict that we're seeing in that region. So I wouldn't put too much into that data. Of course, now any type of dislocation that we see in pricing in the coming weeks and months will be critical for an industry that so far has been able to keep pricing power. Again, one of the reasons is because of this wealthier demographic paying up for that experience. But that, of course, will be key, especially as we keep an eye on the inflation data, PCE, of course, tomorrow.
Yeah, in terms of the cruise operators, they're looking pretty good for the coming years, even if there is a recession. Obviously, if there's a recession, the middle class pulls back. Younger folks might pull back in terms of taking cruises. If there's a big unemployment cycle coming in the next few years, baby boomers will still go on their cruises over the coming years, okay? There's only so much time to do that sort of stuff. If you worked, your entire life, and you know, you got a good amount of money, you're going on your cruises regardless if there's recessions or not. You might go on more cruises in that environment because prices could be down, right? Chipotle CEO, okay, this is going to get interesting.
We've always said we want to give people great portions. We want to give them what they want. And our team members...
You've not shrunk the portions.
No, we never have.
So in the comment section, if anybody out there eats Chipotle on any sort of regular basis over the past, we can call it 5-10 years, do you feel like Chipotle's cut on their portions at all, or do you feel like that is not a reality? Like, if you have an opinion on that and you've been eating Chipotle the last 5-10 years and you still eat it over the past year, do you feel like they've cut their portions at all? I love to hear from you guys in the comments section if that's a reality that you see or not really.
Beginning of time with Chipotle, I think there were billboards that said burritos as big as your head. Like, that's never changed. And our teams, they are focused on giving people what they want. So the whole thing's a little silly. It actually kind of really bums me out when people, frankly, do this videoing thing, because it's like, it's a little rude to our team members. And, you know, our team members, their desire is to give our customer a great experience. Like, that's what they want to do. There's nothing better than our team members giving people the bowl or the burrito that they want. And so, you know, hopefully that's what people are getting. I know that's what our teams want to provide.
Okay, well, I finished half my chicken al pastor, saved the rest for dinner today. But other people are saying, listen, there's less chicken al pastor. And I said, no, that can't be. It's the same amount. And then I started thinking, maybe if you order out, that you're not looking in the eye of the worker, and the worker doesn't. I'm trying to figure it out, Brian.
I don't know. I mean, if you're in our restaurant in person, you know how this goes, Jim. All you got to do is look at our team member, and, you know, if you're like, hey, can I get a little more rice? You just give them a little nod, and more than likely, the guys give you a little more rice.
That's absolutely
the chicken,
true.
You know, they want to give them a great portion of chicken. I, like you, love the chicken al pastor.
Right.
Whenever
Fantastic.
I go into the restaurant, I see people getting great portions. I see a lot of happy people.
Would you ever do it all you can eat like they did the shrimp at Red Lobster?
No.
You don't want to go bankrupt?
We're not going. No. We're not going all you can eat. We are going great ingredients, great culinary, great bowls.
Don't miss a second of.
Back in the day, man, it used to be a happy place to go. Now it seems a little miserable. Anytime I've gone to Chipotle over the past year, man, it seems like the employees are miserable. It seems like the customers are miserable. To be honest, like, it's vicious. It's brutal. But anyways, it's definitely different energy than it was, 5-10 years ago. I can tell you that much in regards to that. So, in regards to, does that affect Chipotle stock price? I don't know. I mean, it could, right? All these videos going viral. Maybe it does. Maybe it actually affects their business negatively, or maybe it just gives them more publicity. I don't know. I don't think we can really go either way on it. One thing I do know is Chipotle stock will have an epic crash. But getting the exact timing right of that is brutal. It's absolutely brutal because that stock trades at ridiculous valuations, and as soon as these growth rates start to slip, that stock's having a big tumble. But to predict exactly is that this quarter, next quarter, that's the tough part because the stock split's still about to come. So that's kind of messing up things, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. If you'd like to support my content, do so on Patreon. That will be the pinned comment down there. Got a few different tiers for you. Much love and have a great day.